Welcome to Framework Fortune. I'm your host Ben, and it's time for another episode of Portfolio Powerup. And we have our good friend H&H trader Hal Hart, who has been around the channel and in and out of the channel and has his own channel, but a good trader. Hal, how you doing?
Doing good, man. Glad to be here on the channel. Glad to share with you.
Absolutely, and you're going to be more of a permanent fixture here starting soon with your own expertise of trading to bring more perspective to the network of Framework Fortune traders and analysts.
Yes,
So,
sir.
so let's get into that. What is your expertise? What is your specialty that you trade every day on a regular basis?
So every day I've been making it I guess you can say my journey of attacking the small cap market and specifically low floats. We know that the small caps are pretty much anything that's around the 300 million to the 2 billion level of the market cap. But I want to focus in on low floats.
Mm-hmm.
When you come to my live stream, you're not going to see Tesla. You're not gonna. Well, you may see them. We may go and look at them to see if they're getting destroyed or how
Yeah.
the SPY is moving. But for the most part, you'll be seeing the low float movers of the day, and we're looking for the most volatility that we can get. We're not looking for 20 cents. We're not looking for 10 cents. We're looking for $1, $2, $3 moves per share. So that's my pretty much what I've been doing for the past, I would say 2 years now, because I came in from options, came into the small cap market, and just work. Options were volatile, and they get your blood pressure up. But small caps, they do something special that takes a little bit of life away every time you trade them. All right,
Yeah.
go ahead.
Yeah. Yeah, that's true. And you did it the hard way, man. You come in investing through options and not stocks. You did the options first and then come into stocks.
Yeah.
That's like the reverse. You stay on Nasdaq and NYSE, or do you do any day trading on the penny stocks, the OTC markets?
No OTC. Stay away from the OCT. OTC. I'm getting it mixed up. That's how much I don't look at them. But yeah, whenever I see those, man, I every trader has a tolerance,
Mm-hmm.
and just like with patience, it's something about risk, and risk tolerance is a real thing. So when I press the buy button, there's a difference between a small cap where I'm like, oh my goodness, something bad can happen, and then an OTC where I'm like, my world just ended. You know what I'm saying?
Yeah, because you got to limit out. You can't. Well, actually, I just read something on a different broker that said you had to limit in, which is normal. That's the par for OTCs. But it said you could market out of OTCs, and I was
Hmm.
under the impression that you could only limit in and out. I've never been able to limit out or market out of OTC. Maybe it's just that platform, but that's you.
Well, it may be that the because to get in and out of any stock or OCT or whatever you're trading, it takes volume.
Mm-hmm.
It may be that you have the ability, but the volume isn't there to actually complete the transaction. So
Right, there's
that
no
may be,
liquidity.
yeah.
Yeah, maybe so, but I thought that was interesting. I just read that last night, and I was like, wait, what? I thought you could only limit in because that's why I don't really day trade OTCs. I'll invest in some that I think have a lot of potential down the road because there are
Hmm.
some good stocks in the OTC markets. There's a lot of foreign companies, Canadian companies, stuff like that. They just can't uplist to the Nasdaq or they don't want to because it's too expensive. But
Yeah.
most of the OTC markets are pretty sketchy and pretty garbage, and having to limit out of a play like that, if you don't hit that limit right, you can get whooped. Do you do any of the swing trading, any long term investing, or are you just strictly day trading, just cash account, just going at it?
I guess this past 2 years, I've been less focused on swing trading and more focused on day trading.
Mm-hmm.
Um, Now I will take positions if I see something that's really good, that's really expensive. I jump in there and hold it, but for the most part, I'm using all of the equity on day trading because I've seen a couple of times where we saw like Coinbase was super expensive. I was like, "Ooh, do I want to trade this?" And you saw what happened with Coinbase.
Mm-hmm. Yeah, I traded it, but it was a quick trade because it came out way too overpriced for that IPO. I mean, yeah,
Exactly.
so
So I'm just and another thing, like I said before, it's my tolerance. I don't have the patience to be swinging. I've tried swinging. I can go and work a job. You know what I'm saying? I like the excitement of getting in and out of day trading. You know, swing trading is cool though. You can definitely make some good profits there, but I don't have the patience.
so you're pretty much a scalper, is what you consider yourself, a small cap, low
Yeah.
float scalper.
Yeah. I'm trying to take off the top, and I'm trying to get the cherry on top without getting cut down low.
Yeah, exactly. Without the ice cream melting first on you.
Yeah.
Scalping is really good. It's a strong strategy. I use it from time to time. But I mean, depending on market conditions, but in any market, there's always scalps. That's the good
Yeah.
thing. Like you can always find 5 to 10 to 25 cent runs somewhere here or there. There's always going to be something, even in the worst markets, that's going to at least pop a little bit at
Yeah.
some point. What is your main go-to strategy as far as like when you're trading? Like I know you're scalping is the of the low floats, but what are you actually looking for? Are you trading triangles? Are you trading off of indicators?
I trade levels.
Okay.
So the levels that I look for, or the levels that I play off of, are usually $quarter levels or whole dollar levels. So I'm looking for like a break of a 25 cents or a break of the 50, break of the 75. Take that quick scalp, and with trading low floats, you have a lot more volatility. So a
Mm-hmm.
break of the 25 can give you a run to the next dollar. So
Mm-hmm.
that's 75 cents quick.
Yeah.
And so, I'm taking all the way up. I really don't have the trades are so quick. It's almost impossible for me to sit here and say, well, I'm going to take profit at this level. No, the trade is so quick. I'm taking profit all the way up, because
Yeah.
I don't have time to sit there and be like, oh, well, let's see if it'll hold this. A lot of these stocks are not holding anything. They're
Yeah.
just
That's
coming
true.
back. you know.
That's
So
true.
that's what my focus is, the $quarter level, whole dollar level. And sometimes I do resistance breaks.
Mm-hmm.
Sometimes, but if the resistance is gonna break and then it has a $quarter level right above it, I'm not too keen on taking that, because it can easily just bounce off of that $quarter level, and then I'm crying for the day.
So you're using pretty much just the psychology trading off of the 25 cent and whole dollar breaks and 50 cent
Exactly.
breaks,
Yeah.
because those are all what I like to call natural support and resistance, because psychologically it's a lot easier to do math at those levels. So most
Hmm.
traders will buy or sell at those levels. So
Exactly.
that's a pretty simple scalping strategy, and I like things being simple. So I'm interested to see more of that
Oh yeah.
on the channel, and what you can bring and show other people that perspective. Had you ran into any issues with scalping where you took like a big loss, something messed up on like one of your orders or something?
Um. When I first started, yeah. Most def. I actually, when I first got into trading, I had never been through a hot market cycle. And so last year, during the beginning of the bug and everything, was the first hot market cycle I had ever seen. And I mean, it was like what, 200% every day. So,
So
it
you said
really
beginning
just,
of the bug. It didn't register to
yeah.
me what you was talking about till like a minute after you said that. Sorry, I didn't mean to interrupt. But the beginning of the bug, I like that.
Oh yeah. But um that was my first hot market experience, and I really didn't know how to handle it. So at that time, I had not transitioned to strictly scalping. I was just using uh, I was using about four trading strategies, which was the bounce off the supports, even under VWAP. I was buying bounce off the support for the run back up, or I was buying. I think I was using ranges at that time.
Mm-hmm.
So I would mark off a specific range if it would stay in that range and look for the break of the range. But man, they were moving so much. If they broke the range it was like goodbye. There's no
Mm-hmm.
pullback last year. But that really changed my mindset of how I should trade, and I that's when I really got quicker. When I started to see how fast that happened, I was like, okay, if this could in less than a minute, these stocks were moving 50, a dollar, I mean 50 cents, a dollar, $2, $3. I can just capture that little move and limit my time in the market.
Mm-hmm.
Because anytime, the more time you spend in the market, it's almost like getting chemotherapy. You really just don't want
Jeez.
to sit there because the exposure will kill you, especially in the low floats. Oh man, oh
That's a hell of a metaphor. I like that metaphor. That makes a lot of sense for these low floats
oh yeah,
stocks.
and um, and that's really what got me to scalping. And
Mm.
it has really been a good thing because most scalps, if you're right, you get paid very well in the low flows. If you're right, you get paid very well.
Mm-hmm.
It's just up to you to be cognizant of your sizing. How you take a big size if you want to. If it goes a dollar, $2, it can easily go back the other direction, a dollar,
Mm-hmm.
$2. So you take 200, 300 shares, you can easily be looking at a $300 loss. And that's the kind of stocks that I'm trading. I only want the most dangerous, but it's because I know what I'm looking for. And if it doesn't go in my way, I know how to exit quickly. I'm
Yeah.
not trying to hold the bag.
Well, I hear penny stocks and OTC stocks and small cap stocks always being called dangerous from everybody kind of thinks that. I
hmm
think it's just stocks and investing in general. I don't think it really matters what it is. I think you can lose all your money on any investment. If you're
Yeah.
investing in Pokemon cards, if they all catch on fire, you're going to lose your whole entire investment. If you're investing in gold and the government decides that they're going to take away gold from the public again, like they did 40, 50, 60 years ago, whenever it was, then you lose your whole investment in gold. So
Yeah.
I just don't like to look at it that way, like, oh, one investment's more dangerous than the other. All of them have the same risk. It's up to the trader to be, like you said, cognizant of your position sizes and be aware of your risk tolerance and don't just take big, massive losses. Like, if you cut your losses
Exactly.
quick enough, you can lose a bunch of trades and win one trade and break even.
Yeah.
If you can win one out of four trades, and as long as your stop losses were tight, if that one trade ran a little bit, then you can actually be profitable with a one out of four win rate.
Yeah.
So,
I think the big thing that why people say it's more dangerous is because how powerful the individual manipulation is.
yeah,
So like if you're trading like Tesla, of course you know from the get go, in the morning, bots are there right at the open. You got algorithms, you got all kinds of things right there at the open. But
mm-hmm,
in the penny stock world at the open, you got a lot of people and
yeah,
sentiment and emotion that's pushing on the news. And so, when it comes to emotional things, sometimes I'm really bad at reading emotions. Whenever I'm in a relationship or something like that, I'm like, yeah, so you're mad. but but that's
you still gonna make me that
that's
sandwich?
what makes it dangerous. The manipulation that can happen.
Yeah, I mean, I get that, but that same manipulation can happen too on the higher level. Like we saw all last year, if Trump tweeted something, the whole entire stock market could drop, or it could
Yeah.
go up. Or like Elon when he tweets something about Tesla or Bitcoin, Elon just drug the whole crypto market down partially. I don't. There's a lot of people blaming him for that, but I don't give him full credit for that because China also banned cryptos and a bunch of other stuff happened. But his tweets do affect the crypto markets to some extent. So that's kind of a dynamic that's changed in the stock market I've noticed because I've been trading for 7 years. Here in the last 3 or 4 years, everything kind of switching. And then also, there's a lot more groups now of traders. Like you've got
Yeah.
the Wall Street bets traders on Reddit. You got Ross Cameron's group and Tim Sykes' group and Sean Deckmar's group, and you got all these guys' groups with like some of them have millions of traders in their groups.
Yeah.
So that type of group alone can pump a stock
Yep.
and push it up. And that's kind of where I've seen the biggest shift in the penny stock and small cap world is if you're not catching them before they're catching them, it's kind of hard to get in there.
Yeah.
Because
and it's hard. It's even harder when you get in. You get in while they're actually like today. I took a trade that I know wasn't my setup. It was already going up. It had already started shooting, and I was like, "Well, I'll be quick," because you never know when that group's gonna be like, "All right, let's sell."
Exactly.
And then you are just. I mean, you basically a victim at that point.
Yeah, exactly. Because if that one whole group decides to sell at once, or that whoever the guru is like, we got to sell here, and he sells and drops his whole position, like Ross Cameron trades with 100,000 shares of these small cap stocks, so him by himself can drop a whole stock, and you throw his group in there, and they all sell at once, you're going to get some crazy volatile drops like that, and that's one of the things I think that scalping really has good merits in the type of world we're in now, the stock market world, because you're getting in and out, you're staying safe, you're protecting your capital, and I mean, nowadays strategies seem like they're working a little bit less and less. Like the more big breakouts, like you have to have the hot market if you're going to trade big breakouts. Like right now, we've seen the last couple of weeks. I'm sure you agree with me. It's been a very choppy market. And we've seen some break out big, and then we've seen some fake out breakout and just crash. Yeah. So it's hard to play in a market like that when you're looking for those big gains. It's like you said. I think scalping's a good way to go. So traders who are not wanting to risk a lot of their money, scalping is probably the way to go for you. Because when you're getting in and you're getting out. If the stock drops, well, what's normally like your risk to reward ratio? You said you're looking for 75 cents to $1. So how much are you risking for that 75 cents or $1 every time?
So usually, let's just say basic 100 shares. You take 100 shares, and you want the 75 cents. But the way that I handle risk, I say, okay, per trade, how much do I want to lose today? And that's how I base my risk. So if I say, well, per trade, I only want to lose, let's say, $20 per trade. So if I take 22 trades and have a risk of $20 per trade, and I know after I have a max loss also set. So the max loss pretty much per day is around $50, and I'm like, I don't know if I want to do it anymore because I've lost too much. Especially most of my losing days are accumulation losing days. So it's not like one trade; it's multiple losing trades that get me there. But I would say I'm looking for 3-to-1, but for the most part, in most of these low floats, it's usually like 4-to-1 with the way that they pay out. Because I can take a very small position size with a low float and get paid very well because it's moving so big.
Yeah.
Like today, like I was telling you, I took the green trade for $1.14 on small share size. But this is the thing: what do you want to risk? The $1.14, you can take 200 shares and make over $200 on that trade, but are you willing to risk the downside? And so the downside on that, the sizing, the more that I go up, let's say, the more that you go up, the quicker you're gonna hit that stop loss. So $20 on 100 shares is very easy to hit. I mean, it can literally drop a little bit on 100 shares and you'll be down to $20.
Yeah.
But it also depends on how fast you are.
Yeah.
And your entries. If you can get in and you say, okay, every 10 cents I'm going to take profit, then on $1 move, you've taken all the way to the top. And by the time you get to the top, you have 10 shares left, 5 shares left. So if it drops, hey, it can drop $1. You only lose $5.
Yeah.
You know what I'm saying?
So your profit outweighs that.
Exactly. So that's what I'm saying. These trades are so quick, it doesn't give you time to think about your your risk sometimes.
Mm-hmm.
And that's why you see big traders like Ross Cameron or other traders, they'll have big red days because it's no time to think.
Yeah.
So you have to have this already planned out before you start pressing the buy button and say, okay, if this thing goes down 10 cents, no matter what my share size is, I'm out. So, you know, you gotta have to measure it like that. It's a lot of I guess reading emotion in the moment.
Yeah.
Because it can drop. So I've seen some things jump up $1. It's like, oh my goodness, this is so strong, and it pulls back all the way down, leaves a big old top and tail, and you're like, now it was just up $1.
Yeah.
I was clearly in the green, and now I'm down $50.
Yeah. Yeah, sometimes
How?
they happen so fast, man. You just that's why I tell people you can't win. There's not one strategy where you're going to win every single trade. That's just not possible. Even algorithms don't get every single trade right. There's always going to be some little bit of error because you never know what is going to happen with a stock in reality because it's not stocks that we're actually trading, it's people.